Silver has long lived in the shadow of gold, yet throughout history it has repeatedly demonstrated that it can produce some of the most powerful price rallies in the precious metals market. While gold often captures headlines whenever economic uncertainty rises, silver quietly builds momentum until conditions align for significant moves. Unlike many other assets, silver occupies a unique position because it is both a precious metal and a critical industrial commodity. This means its price is influenced not only by investor demand, but also by manufacturing, technology, renewable energy, electronics, healthcare, and numerous other industries. Recently, many market analysts have begun suggesting that silver could be approaching another major breakout. Although no one can predict future prices with certainty, several economic, industrial, and financial trends are creating conditions that many believe could support higher silver prices over the coming years. For investors willing to understand both the opportunities and the risks, silver deserves much closer attention than it often receives. In this video, we'll examine why silver is gaining renewed interest, what factors could drive its next major move, the risks involved, and how investors can think about silver as part of a diversified long-term investment strategy. Today, we will talk about silver could explode next. Don't miss this opportunity. So, before we start, make sure to hit the like button and subscribe to my channel. Understanding silver's unique role, silver is unlike almost any other investment asset because it serves two important functions simultaneously. On one hand, investors purchase silver as a store of value during periods of inflation, financial uncertainty, and currency weakness, much like gold. On the other hand, manufacturers require enormous quantities of silver for industrial production because of its exceptional electrical conductivity, thermal conductivity, and antimicrobial properties. This combination creates multiple sources of demand that can influence silver prices under different economic conditions. Why silver is more than just a precious metal. Many people think of silver primarily as jewelry or collectible coins, but industrial demand actually accounts for a significant portion of global silver consumption. Silver is used in solar panels, electric vehicles, smartphones, computers, semiconductors, batteries, medical equipment, telecommunications, water purification systems, aerospace technology, and advanced electronics. As global industries continue modernizing and adopting cleaner technologies, demand for silver may continue increasing, regardless of investment demand. The green energy revolution, one of the strongest long-term drivers for silver, is the global transition toward renewable energy. Solar panels require silver because it efficiently conducts electricity generated from sunlight. As governments invest heavily in renewable energy infrastructure to reduce carbon emissions, solar power installations continue expanding worldwide. Every new solar panel requires silver, creating additional industrial demand that did not exist at today's scale just a decade ago. If renewable energy adoption continues accelerating, silver consumption could increase substantially. Electric vehicles are increasing demand. The automotive industry is undergoing one of the largest transformations in history, as manufacturers shift from gasoline-powered vehicles to electric vehicles. Electric vehicles require significantly more silver than conventional automobiles because of their advanced electrical systems, battery management technologies, sensors, charging components, and electronic controls. As millions of additional electric vehicles enter global markets over the coming years, silver demand from the transportation sector could continue growing. Technology depends on silver. Modern life depends heavily on electronic devices, and many of those devices rely on silver. Smartphones, laptops, tablets, televisions, data centers, communication equipment, medical imaging systems, and countless industrial applications require silver due to its outstanding electrical performance. As artificial intelligence, cloud computing, robotics, automation, and high-speed communication networks continue expanding, industrial demand for silver may remain strong. Limited supply could create pressure. Unlike paper currencies, silver cannot simply be created whenever demand increases. Mining production requires years of exploration, permitting, financing, and construction before new supply reaches the market. In many cases, silver is produced as a byproduct of mining other metals, such as copper, zinc, and lead. This means silver production does not always increase even when silver prices rise, because mining decisions depend partly on demand for other metals. If industrial demand continues growing while supply remains constrained, upward pressure on prices could develop. Investment demand can amplify price moves. Industrial demand is only part of silver's story. Investment demand also plays a significant role. During periods of financial uncertainty, inflation concerns, banking instability, or geopolitical tensions, investors often purchase physical silver, exchange-traded funds, or mining company shares. Because the silver market is much smaller than many other financial markets, relatively modest increases in investment demand can sometimes produce significant price movements. Inflation and currency-concerned silver has historically attracted investors seeking protection against inflation and declining purchasing power. When central banks increase money supply or inflation remains elevated, some investors diversify into tangible assets with limited supply. Although silver prices do not always move perfectly alongside inflation, many long-term investors include precious metals within diversified portfolios to help preserve purchasing power over time. The gold-to-silver ratio, one metric closely watched by precious metals investors, is the gold-to-silver ratio. This ratio compares the price of gold to the price of silver. Historically, periods when the ratio becomes unusually high have sometimes been followed by stronger silver performance relative to gold. While the ratio alone cannot predict future prices, many analysts monitor it as one indicator of potential relative value between the two metals. Why silver can be more volatile than gold, silver has historically experienced larger percentage price swings than gold. During strong bull markets, silver has often outperformed gold because its smaller market size allows increased demand to influence prices more dramatically. However, the opposite is also true during market downturns, when silver can decline more sharply. Investors should understand that greater upside potential often comes with higher volatility. Central banks focus more on gold than silver, unlike gold, which central banks actively hold as reserve assets. Silver plays a much smaller role in official reserves. Instead, silver's demand comes primarily from industrial users, private investors, manufacturers, and jewelry markets. This distinction creates different market dynamics and means silver prices are often influenced by both economic growth and investor sentiment simultaneously. Physical silver versus paper investors interested in silver have several options. Some prefer owning physical silver in the form of coins or bullion because it represents a tangible asset held outside the financial system. Others choose exchange-traded funds that track silver prices without requiring storage. Some invest in silver mining companies, which may provide leveraged exposure to rising silver prices, but also involve operational and business risks. Each investment method has unique advantages and considerations, depending on individual financial goals. If you like this video and would like to see more like it, please give it a thumbs up, leave a comment, and click the button to subscribe.